So in today's video, we're going to try to answer the age-old question, should you buy or should you rent? So my name is Dan Free. I do educational videos every day to inform you guys the economics behind real estate. And in today's news or today's topic, we're going to discuss renting versus buying. Now, I know what you're saying, Dan, there's a crash coming, interest rates are terrible, and all this other stuff. Yes, I'm not going to disagree with you on any of those aspects, but you have to look at long-term. When it comes to housing, like your investments, when you start putting money in your 401k or your retirement accounts, you probably don't go in there every day and say, oh, the market's down, I'm going to sell. Oh, the market's up, I'm going to buy. Oh, the market's down, I'm going to sell. You probably don't do that. You hopefully you invest, you put that money aside and you let it work for you for the next few years. So that being said, what we want to discuss today is home ownership versus renting. So there is no cookie cutter answer to basically put you in the best situation for you. It all depends on your finances, your family status, your job status, how much money you have, where your credit scores are, and specifically, where do you live? So in today's video, we're going to dissect some specific areas, and then we're going to compare renting versus buying to at least give you the financials and the numbers behind this. So the first thing I wanted to take you guys to is over to this section right here. Should I buy or should I rent? There's calculators and there's tons of other things. But the problem here is not giving you specific data for your area. So I want to give you the tools on how you can do this research. So the first thing we want to come to is saying, how much rents, or your rent, how much rent you're paying. But in many cases, people don't understand or don't know what's going on with their rents and what the projections are for the next few years. So I pulled up, and you can go into Zillow, and they have all these charts in there, so you can find this in the data section in the research. So I went in and found the top markets for rental properties. Okay, so if you're renting in any of these areas, it's going to give you the state and the city behind that, and the average rents, and then what those rents are doing. You see, like, for example, Phoenix, it was plummeting, and then it went back up, and now it's plummeting again. Los Angeles, it's coming down because they're on record highs. But you can also see areas like Chicago. We're having a pretty good market right here with real estate. Houston's basically steady, but there's a lot of bumps in the road. So the first thing I want to do is dissect in this area. Let's just go over through these numbers and say, okay, what's the average rental in all these areas? So if you break it down, 2,000, 2,900, 2,000. So let's take, for example, the average rents in here is probably about $2,200. Okay, so that's just the first piece of this equation that we're going to go through. The next is real estate is really, really centralized. So you have to decide, what city are you looking into? Because if you pick Hartford, Connecticut, you're seeing that your house value went up almost 6% so far in 2023, a far cry from the crash everybody's saying. However, I'm not saying the markets are peachy everywhere. If you go down through here, you're going to see down, if you live in Austin, Texas, you got a 10% hit. I've been calling that. I'm like, if you're in Texas, specific areas of Arizona, California, and Utah, you're probably seeing some market declines, and you're seeing that right through here. Texas, Arizona, Nevada, California, Texas. These are all areas that saw probably 20, 30, maybe even 40% appreciation over the last 3 years. So if I lived there for that long and I am up 40% on my house value, but it dropped 10% from there, I'm still okay. Okay, so it depends on where you're looking to buy. So the first thing you need to do is figure out the rents in that area, okay? And then based on those rents, how much house can you buy? And then does it make sense? So let's get over to the financial part of this thing. So the first thing you do is go over to the rate update. This is my website, and you hit mortgage calculators, hit rent versus buy, and I already preloaded some data in here. So if you look through the data that I put here, you can see the monthly average rents that I put in are about $2,200. Where did I get that? Well, I got that right from this equation here. So I took the top 10 or 15 markets in the US, and we broke it down and averaged them. So it's about $2,200 is the average rents out there. So we put that in here. The rental, monthly rental insurance, it's about $15 because you have to insure the content of your property, but that's just a minor feature. Expected inflation rate now is at 3.5, 4. So let's change this to 4 for right now. So let's just put that in here. The average home price that we're looking at right now in today's market is about $225,000. Now I know you're going to say, Dan, there's no $225,000 houses in my market. But in a lot of these markets, there are. In Chicago, we have them here. You can find Atlanta, Georgia. You had them there. Orlando, Florida, just outside the the center there. You can find properties there. But I'm just trying to teach you the techniques on how to do this on your own. So we have $225,000. Now we have down payments. Most first-time home buyers, other than the products we have available right now, which is the hottest product in the market, is the 1% down payment, and you eliminate PMI. So I'm not going to talk about that today, but if you want to learn more about that product, click right here. It's a new product that just came out a couple months ago, and it is taking the industry by storm. But we're going to go through here and say the average person, when they're buying their first house, usually needs 3% of a down payment. Nope, not 5, not 10, not 20, but 3%. So 3% of 225 is $6,750. Loan term, 30 years. Average rate right now, 7%. Discount points. Now, this is where you have to really start shopping for your mortgage. So what we do, we're a mortgage advisor. I'm licensed all over the country in all 50 states as well as Puerto Rico. I actually work at a bank, but we're also one of the country's largest mortgage brokerages. We're set up with almost about 80 different lenders. So we can do all the shopping for you. So basically, we do one application, one credit pool, and we're going to scan the whole country to find out where is the best rate out there for you in the country. So we're going to go in and say it's 7%. Fees, discount points, we don't charge any discount points unless you want to buy down the rate. How much in origination fees do we charge? We don't charge any origination fees in most cases, again, unless you want to start buying down the rate and putting more money down. So that's that part of it. How much in fees would it cost you to get a loan? Most cases, it's going to be about $3,000. So where a lot of people get confused is you're going to need your down payment money. And in many cases, you're also going to need an extra $3,000, $4,000, maybe even $5,000 for your closing costs. Okay, that includes attorney fees, real estate appraisals, inspections, title insurance, setting up escrows. And if all this is confusing, just please, at the end of this video, I'll give you a link where you can schedule a consultation with us one-on-one. The next thing is PMI. There's a PMI factor. So unless you put down 20%, you're buying a house, you need what's called PMI. So basically, it's just a factor built in that you have to pay that fee for a specific amount of time, and then it automatically goes away in most cases. So there's a PMI factor here, but I'm going to show you all these details by the numbers here in a minute. Homeowners insurance, we're just using that as a factor because it's normally based on the value of the property. So we're putting in a 0.5 figure there. Association fees on this loan, there is no association fees. Average monthly maintenance, we're going to say it's $100. I don't know. This is what it preloads with, so you're going to have to figure that out on your own. Annual property taxes, again, this is going to be specific to your area. So do some research, reach out to a realtor, go into Zillow, go into some of those realtor.com sites and just look at some properties you think you would like, you think you might be able to afford, and look at the real estate taxes. Plug that number in here. Your state and federal taxes, they'll be populated based on the information you put in. And then we just go down through here and plug in some additional data. So what this is telling us based on this scenario, estimated cost to rent, $142,000. Estimated cost to buy, $71,000. How does all this figured out? Well, click the print button, and here's all the numbers mathematically of what it's going to give you. So what it's going to tell you is saying, well, if you're renting, it's pretty simple. You're going to pay that rent for a specific amount of time. This duration of time, I think, was 5 years or something of that sort. But I'm just giving you the fundamentals on how to do this on your own. So if you rented over this time duration, it's going to cost you $143,000. Okay. And there's no benefits to it. You're just paying the landlords. You're basically paying your landlord's mortgage. But let's get over to if you were to buy this property. So the total interest you would pay on this specific loan would be $74,000. Okay. Total closing costs, $3,000. It might vary. It might be up a little bit, or you might even get a seller credit to bring this number down to zero. Total property taxes you paid over that time, $22,000. Maintenance fees, $7,000. Homeowners insurance costs, $6,580, unless you're maybe in Florida where that number is skyrocketing right now. PMI is going to cost you $5,833, and the cost to sell your house. Now, this analysis is over a 5-year time frame. Okay, so this is already contemplating you selling the house. And then how much money would you have left over after that time duration? So again, if you rented, you basically paid your landlord's mortgage. If you bought, total cost, net cost, tax savings, $27,000. Home appreciation, $35,000. Net benefits, $62,000. Cost of owning that home, $71,000. Half of what it would be if you were renting that property. So no, I am not saying everybody should buy a house. What I'm telling you guys is make sure you do your research and you go through what's the average rents in your area, or what are you paying? Okay, then let's go into what area are you looking at? Are you looking in some areas that might be coming down right now? Okay, Austin, Texas. Maybe you can sit on the sidelines for a couple months to see if this number is going to continue to go down and down and down. Or maybe you pick up a property that's 10% less than where it was just last year. And then finally, go over to the rateupdate.com right here. Under calculators, click the rent versus buy. You can do all the math for yourself. So how do you reach out to us to get some help? Let's say you need just help from this or going through the financials of this, or how do you find a realtor in the area that you're looking to buy to see, how much is there that you could possibly afford in the price range that you're looking at? So all that you need to do is go over here in the Apply Now button. The Apply Now button doesn't bring you off to a mortgage system where you have to plug in all your data and start, seeing if you can qualify for a mortgage. What this does, we do something unique. We schedule a consultation call with you, and that's what you're doing right through here, to do a one-on-one consultation with me. Yeah, a lot of times it's me or one of my mortgage professionals in the background. All of us have over 10 to 15 years of experience. I have over 33 years of experience in this, and we would love to help you. If you're out there and you're watching this video and like, Dan, I just need your help right now. How can I get some assistance? Well, do me a favor. Give us a call at 844-775-LOAN. That's 844-775-5626. Or, like I said, click the Apply Now button, schedule an appointment with us. We'd love to talk to you to discuss all the financials and all the numbers behind home ownership. So thank you so much for watching, guys. I greatly appreciate it. If you find value in my channel, all I ask you to do is two things. Give me a thumbs up, and make sure if you haven't yet subscribed, please subscribe down below. Love to have you on our team. Thank you so much. God bless. Hope to talk to you soon. Bye-bye.